Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Alan B. at Uranium Research, Mr. Bojangles, at Adequate Ryan, Joe G, at Boone P81, Samar C, at GDog54, John W, Ali Bongo 888, and Eduardo B. Returning to the program today is Roger Lemaitre. Roger is the president and CEO of UEX Corporation, an Athabasca Basin focused uranium exploration and project development company with various projects in the basin, including exposure to cobalt and nickel. UEX is listed on the Toronto Stock Exchange under the symbol UEX and also on the US OTC markets under the symbol UEXCF. Roger, welcome back.
Well, thank you for having me back.
Well, let's start off here, Roger. Why don't you just give us a quick take on the current uranium sector conditions, just to say keep it to the last 4 months or so. What's your thoughts on this market and sentiment and where we're headed?
Oh, wow. Definitely moving in the right direction. I think we're seeing utility buyers of uranium start to get a little bit edgy about things. We're seeing a lot more action from them behind the scenes trying to secure supply. But I think probably the most scary part for most of us who've been in the space for a long time is the incredible volatility we're seeing in the space. I think most of us in the uranium space are used to seeing, we're seeing the long-term fundamentals that have been talked about for several years start to come into fruition, or that maybe we're at the end of the beginning of this process of seeing, that supply gap that everyone's been talking about happen. The Sprott Uranium Fund, of course, has been sort of the catalyst that I like to think is kind of like the Cigar Lake flood of the 2006 era to start the process rolling. But the difference we're seeing this time around compared to the last time around is there's much more volatility. We're very used to seeing volatility where things are moving in an upward direction or a flat direction in terms of uranium price and uranium equities. And we used to see the sawtooth pattern where things drop due to little bits of news here and there. But we're also, with the Sprott Uranium Fund being a significant influencer nowadays, we're seeing not only is the volatility in the downward direction, but it's in the upward direction. So the ups and downs are bigger than I think what we saw last time around.
Appreciate your views on where we're at here. And in natural resource volatility, pretty standard issue. Let's go back here. I want to kick things off with an update on the capital structure for a moment, where we are on shares outstanding, the cash on hand, and the major shareholders.
Okay, so for us right now, we are at about 537 million shares outstanding. We have a little more than 5 million in our treasury directly. We do hold money with Denison in our co-owned company, JCU, which is about, I can't really say that because I'm not allowed to, but it's substantial enough that we're going to cover next year's exploration and development costs that JCU are involved with. So right now, we're in a pretty good spot financially.
Any comments on, major shareholders that are on the roster that you can mention?
Yeah, most of our major shareholders right now would be the uranium funds that most people know about, the Segras, the Tribecas, the Sachem Cove, and Extract Resources are our largest shareholders right now, in addition to all the key uranium ETFs.
Roger, and how about the management team and the BOD? Generally a very small position in the shares here, something to the order of, at least last information circular, we were somewhere around 2.1 million shares, not including options, RSUs, et cetera. But any plans to grow that share ownership amongst the management team and the BOD? And what would you say to maybe shareholders that are concerned about that shareholder ownership level?
Certainly can understand the concern. This year in June at the AGM meetings, the company came to a policy that all board members and management are going to own within the next 5 years 3 times their salary. So whether that's a board director salary or a management director salary. So our company management and board will be in a significant buying trend here over the next few years. So that's sort of where we're trying to address that issue.
I think one of the more important transactions, Roger, and I think you would agree that happened here, would be this JCU arrangement that took place. First off, well done to you on seeking out that transaction initially. Of course, you got some other parties like Denison highly motivated once that was announced. Talk about the idea. How did it come to materialize, and what was your thought process with doing a deal on JCU? And obviously, I think that started to reflect some of the value that was in that deal.
Back in December, about this time last year, we heard wind that that JCU might be available for sale. Their ownership was a trifecta of a consortium of companies in Japan. Two of the companies that owned part of JCU decided to get out of the business and left it to a company called OURD, or Overseas Uranium Resource Development Company. OURD was a consortium of 29 of the largest miners, bankers, traders, commodity traders in Japan. And to be fair, OURD is a pretty small component of when you're 1/29th of it in your name, your company's name is Mitsubishi. OURD was a significant player in the uranium business globally. They own a good chunk of the Cominac operation in Niger that shut down in March. And they owned a piece of the McLean Lake Mill and Midwest deposit in Canada. And I think with the shutdown of what was happening over in Niger, the 29 company partners said, you know what, it's time to divest of these assets. And we heard that JCU was for sale. And myself personally and a couple of our board members have had a long history, maybe not just at UEX, but going back to our days in our previous roles. I managed a lot of the joint ventures that on behalf of Cameco, when I was Cameco employee, that JCU was a part of. And so we had a relationship with these guys for many years. They did offer it up to sale for a handful of companies. I don't know which ones, because that was all done very privately. And I think we were able to move very quickly on and get their interest in moving along a time frame that they had a very short time frame to develop. We would have loved to, and we struck a deal pretty quickly. I would argue that we would have loved to have owned it all. We still, I think if you asked our friends at Denison, they would have loved to own it all too, but neither wanted to end up in a spot where we didn't own any of it. We had a deal, we struck a deal very quickly, and I do believe, as I said in previous outlets, that we felt that we had a pretty ironclad deal. And at the end of the day, through our grapevine, as Denison came in and rightfully so, made their offer an opportunity, I think we could have easily taken them to court and uphold what we thought were, our ironclad rights, but it would have been several years of legal negotiations and fighting and trying to get people to testify across an ocean. And we just felt as a management team and as a board that it was better to share this than to try to fight for these rights and actually raise money to fight legal battles. That's just a difficult spot for a company to be in, and fighting companies with much deeper pockets than we have over across the ocean. And when Denison came to us and said, hey, maybe instead of getting into a bidding war scenario, we should do more working on a together process, it came together very, very quickly. And I can say that they've been, I hope they feel the same way, but we've been really good partners, and they've been really good partners with us on JCU to date.
Good to hear you guys got along on that, and that some type of an arrangement was reached. I think it's probably a wise decision to not try to outspend Denison, given the difference in market caps of these companies and also the firepower that exists between them. More value will be built as this cycle moves forward, Roger, as you know, and that overall it was a pretty dang good move there, and also that some other parties should have been looking at this that maybe weren't looking at it, and you guys brought that ahead and were a few steps ahead of the competition here, and I think that was pretty evident. Next thing here, definitely a lot of questions, and you've gotten some popularity, Roger, on social media, especially Uranium Twitter. This spin out with West Bear cobalt-nickel project. It's been promised for some time with delay. When do you see this will definitively happen, and what structure can existing shareholders expect?
Well, I don't think our structure has changed since day one. I mean, it's always subject to whatever opportunity pops up in front of us, but our goal has always been, and it still remains, to spin the assets out into a separate company and as this company was formed back in 2001, dividend shareholders out to the shareholder of the founding company, which would be us in this case. We were, when Pioneer and Cameco came together to form UX in 2001, the shares that Pioneer shareholders got, or the Pioneer received, was dividend out to the Pioneer shareholders, and we visioned very much the same thing. But at the end of the day, it comes down to value, and I'll go back to 2017, where cobalt prices are where they are exactly today. When we entered the cobalt space, and we went from concept with a couple of drill holes and said, oh, there might be something here, from middle of November of 2017 to a 43-101 report by the end of June on a first resource basis, which is, I'm going to say a lot of pride in my team, was almost unheard of in the space, to make a discovery and get to a primary resource at a 43-101 level in a 6.25 month period. Just the beginning of June 2017 or 2018, when we just were ready to issue the report and we had a plan to do the spin out, cobalt market collapsed, partly due to the price correction from $90,000 a ton to about $55,000 a ton. But also in Toronto, there was a very significant cobalt equity offering that went sour, bought deal $300 million financing, and cobalt became a very challenging proposition in the investment community in Toronto. Price of cobalt continued to collapse, and it's been relatively flat for the last couple of years. And not only was it flat, we saw a lot of capacity idled, and potential fears of, despite the fact that cobalt demand is growing pretty rapidly, the EV adoption is moving way faster than I think even the most optimistic people were thinking. With idle capacity of mega projects that had over 30% of the world's supply capacity sitting idle, there just wasn't a lot of appetite to move these projects along into a new vehicle. And only just very recently has that changed. But they're scared. So we go out there and say, hey guys, bring us, let's find some strategic partners or people who want to finance, help us finance a new spin out. And we're getting sort of radio silence right now from groups because, quite frankly, we've seen last year's gold being really excited, and this year uranium, and everyone's focused on the hot commodity of the time, which right now has been uranium. So people are very eager to talk to us about uranium opportunities, but less so about cobalt opportunities. And it's not so much about can we do it. We could have done this any time. It's about, I like to talk about our management team. Our job is to the UEX shareholder, not to the new shareholder who might come in to help move the West Bear project along. And there's got to be a win-win between both. But I mean, we could have spun this out last year for $1 million. But back in 2018, there was an argument that there was 10 to 20 times that value in our company on West Bear. And so we need to see a little bit of that value. And I think with the cobalt price recovering to the same levels we saw in 2017, the opportunity is now there to create a value where, like I said, we could have spun out for $1 million last year, and UX shareholders would have probably owned 20% of the post-IPO company. That's not a fair value for shareholders today, or our UX shareholders. It needs to be a better balance. And I think with the price moving in the right direction, that balance is now available. Now it's a question of finding the partner that wants to be involved with us.
Okay, so basically find a partner. That's first. This is not going by itself. There needs to be a partner. And then also with regards to the share distribution on the new company, is it something along the order of a quarter for one, or what's the distribution anticipated?
Until you know the ultimate valuation of a post-IPO company or what we anticipated, that's impossible for us to say. Like it really is. Okay. 10 to 1, 1 to 10, could be anywhere in the middle. Probably will be.
Okay. If cobalt nickel market and junior equity sentiment increases substantially here, would you guys go in alone on getting this spun out and getting a management team put together, or must you have a partner?
No, we don't have to have a partner. We need to have someone who wants to, and the partner might not just be a technical partner. I mean, I think actually for us, that's the least important angle here. It's the financial partner that wants to come in and help us move. We think we have a very unique idea, and it's got incredible potential because it's never been looked for. And the last thing that we want to do is set this idea adrift for UX shareholders and find out that 6 months down the road, the new spin out couldn't finance itself. And then that whole idea and value gets stranded. So it's about being able to finance the company through the next, the new uranium, or excuse me, the cobalt company through the next couple of years. And so, yes, that's the challenge that we're up against, but also balancing that with value. It's not just a question of doing something, it's doing something that creates value.
Okay, certainly an objective to try to complete 2022, but no guarantees.
We've thought this since 2018. The right partner, the right time, the right balance that creates value, we'll do it. And just haven't, and I know people think we're not doing anything on that front. Believe you me, we've been reaching out to tons of groups, and I've heard lots of comments. Why don't you talk to this group? It's like, well, yeah, I know, we've been there. And it's a little bit frustrating for everybody. I think more than anything else, it's more frustrating for the management and board here, because we've really wanted to do this.
Well, let's move on here, Roger. Let's talk CDRN. Comments on this? What's UEX's perspective here? How do you think CDRN and the events coming out of that will impact UEX and impact projects in the basin?
Well, it certainly had an impact on UEX and UEX shares value, and it's, you know, a little frustrating for us because, you know, while we do have our Shea Creek projects in the area of interest that CDRN's been talking about, our partnership, and we don't have a single asset in that area that doesn't partner up with Orano right now. And Orano and CDRN have had a long-standing relationship. And as the operator, as Orano is the operator, it's very hard for us to inject. Well, it's not hard for us to inject ourselves in the process, but it's appropriate for Orano to carry the torch for us on that. And, you know, I don't sit there and say that those two are probably the best of friends at all times. They do have a very good relationship. So, you know, for us to come out and make public statements can only cause damage to the relationship, because no matter how it's intended or how it looks, it's, you know, our assets there are teamed up with Orano, and Orano has a world-class company with solid relationship with them. How it impacts where things are going, I think for investors, you know, we're seeing the beginnings of what we're seeing in most of the rest of Canada come to the fore in Saskatchewan, where things have been relatively settled for a long period of time. And I do believe that it's, you know, part of this is frustration from the stakeholder communities. Part of it's frustration from the companies, and quite frankly, the group with the duty to consult is the Crown, and they're kind of dropping the ball a little bit the last little while. And I think you're going to see more interactions between the companies and the stakeholders directly, which is probably where it needs to go anyway.
Okay, so let's cover the next steps on Christie Lake. What do you have there as far as updates on Christie Lake? How do you plan to move forward here?
Well, actually, for Christie Lake, we've had our drill program from the fall here completed. We've had a little bit of analytical troubles with the lab and had to send stuff back a couple of times because they didn't meet the QA/QC requirements. So those, I keep telling people that's imminent, and it is imminent. We are planning across the board in UEX next year a significant exploration operational tempo increase, so a little more work being done than we've done in the past. We've always tried to be, you know, with the JCU deal being the exception, although I think that the money we raised for JCU was inherently fair when it comes to the value that we brought with the acquisition. We've always tried to be cognizant of dilution to shareholders, and we've moved our tempo of operations up and down compared to where the market feels they want to see us work. We're getting a lot of signals saying do a lot more. At Christie Lake next year, I think we're going to see a substantial, we do have a plan. It's not public knowledge yet, so I can't get into the details, but to do a whole lot more work. And I think for us, you know, the strange part for investors is to hear that we're now going to start moving on phase 2 or year 2 of our original 5-year operating plan when we picked up Christie Lake, even though that was 5 years ago. And what we learned in year 1 of our operational plan or of execution for exploring the project was that despite the fact that we really like the basement potential of Christie Lake along the main Yellowega trend where we have the mineralization, that there was substantially more classic unconformity potential than we would have thought when we picked up the property, even after our due diligence review. There were things that came out of that first drill program that went, wait a second, we got to look for the classic unconformity, that Cigar Lake style, the pipe deposit. We did find a small version of that at Aurora, but I think this year you're going to see us focus a lot more on, okay, let's go back to year 2 of the plan. look for the basin potential. We've learned a ton more about the intersecting structure combinations that we need to see in the basement that every basin deposit has in the Athabasca Basin. And we'll start our process of looking along the trend back towards the main McArthur River mine. So that will be what we're looking at this year, in addition to work on other projects as well. Our JCU projects are going to be slightly more active than we were anticipating. Of course, there's work at Wheeler River, and some of the partnerships that they have minority stake in will be busier this year that have been quiet for the last couple. So we're pretty excited about a significant amount more work this year.
You guys have a lot of projects. What do you think on working towards bringing in some interest from maybe new entrants into the sector, maybe new entrants into the basin, JVing out some of the non-core stuff, maybe monetizing some of the non-core stuff to companies who want to come into the basin? What's your thoughts on focusing in on those 2 to 3 core projects and moving some of this other stuff, in a way useful to shareholders?
Absolutely. I think we've said for many years, being unique in the uranium space in the Athabasca, that being we're a portfolio of opportunities. Meanwhile, we have advanced projects that are ready to move towards development, like Wheeler and Horseshoe Raven and others. That there's too many projects in the company, and we need to create value at the lower end, the grassroots end of the portfolio. And it was always, and once again, it's kind of like the same story when it comes to the cobalt assets, is about the right timing. And you say, well, why don't you do a deal with so-and-so or so-and-so in the space? And you're going, well, okay, yes, we could. Most of the uranium incumbents in the Athabasca Basin have had their flagship project that they've been struggling to finance for years, or been doing slower work on. And as the uranium markets turn, you're seeing those projects move forward quicker because they're more financeable. A lot of more new entrants in the market. Believe you me, we've been talking to probably close to a dozen of them right now. Great opportunities about companies that can come in and finance themselves. In the past, I think the challenge was getting the financing to do the work. We're not willing to do a deal for the sake of just doing a deal. We want, if we're going to give away, what we think are some prime assets, because we picked up this land package in 2001 to 2004, before the last boom, we got to pick up land on the key trends in key areas of both the western, or eastern and southwestern parts of the basin, and even the North Rim. And they'd be flagship projects for an awful lot of our peer companies. So we're just not willing to give something away to get a deal so we can monetize something in 3 months' time or 4 months' time. We want to do that, of course, but we also want them to be successful and be able to solve a problem and actually commit to doing the work on the ground. And so, a lot of the deals that you're seeing, we're clearly looking at that. We think that the assets that we're looking to move along are more valuable than those. And so they're a little harder to get to the finish line, but we are literally talking, and we do believe that we need to monetize a lot more of those assets. It's just getting there are talks in progress. So yes. We can't work them all. Even in the best of markets, we can't work all these projects. So we know we have to monetize them. It's about finding partners that have some legs that can last the next couple of years and solve an exploration problem. Each one of our properties has, we've gone through in infinite detail and said, okay, what would we do if we had money? How much would we spend to be able to solve or answer the next 1 or 2 questions? And I just don't want to do a deal that gets someone up and funding on a flavor of the month and turns around next week, and their next week's, will be cannabis this time. Who knows what the next trend will be, and use it as a launching point. We want them to focus on the Athabasca Basin, and I think that's the key part. We want them to focus on our projects, and that's a feeling out process.
How about consolidation in the basin? Roger, what do you think about that? Do you think that there's maybe some potential companies that make sense to put together in the basin? I mean, it's a crowded space. The basin is certainly crowded and will probably get more crowded. What's your thoughts on getting together with other companies at this point, or do you have enough on your plate with existing projects and that there's not really any value to do any potential consolidation work in the basin area?
There's always value on that. Always. It comes down to, for us, when I look at us with 31 projects, we always look at consolidation as a win-win scenario to help someone. If we're going to do a consolidating process where the best asset that is coming across to us would rank 10th, 12th on our portfolio of opportunities. We don't feel that's value creation for UEX shareholders. So those opportunities are relatively limited. There are several companies in the basin that are focused on a single asset, and until they're ready to move, and they're bigger than us, until they're ready to move into a broader scale, then that's probably a little bit hard to do. I can see consolidating opportunities that might include stuff from outside the basin as well. There's very little doubt that there are two jurisdictions in the world that create larger value in uranium space. One of them is the Athabasca Basin, and a lot of people like to get that, and the other one might be your Western United States. So those jurisdictions create a premium. There's definitely possibilities both within the Athabasca and within combining outside the Athabasca as well to create a more diversified scenario. But once again, it's not just consolidating for the sake of consolidating. It's bringing value to both sides. Both sides win. And those are harder. Those are much harder.
There's a few routes on that. There's a few paths, as we've seen. There is consolidation for the sake of consolidation, and that still works. We've seen positive results out of that. And then there's meaningful M&A where there's actually a pipeline being built. It's something that mineable pounds, if you will, that can actually get out of the ground with the right teams, obviously the right jurisdiction set up, and so forth. Related to jurisdictions, Roger, I mean, where would you look? You've certainly said that there might be some interest in the United States. Would you go beyond the United States for UEX, or do you feel like it's pretty much North America?
I think strongest field would be North America. We've always been the company, and we don't say it in our stuff more recently. Even before my time with the company, it's all about working in the safe jurisdictions that are investment jurisdictions, which honestly happen to also be the best uranium jurisdictions as well. So we have in the past and would continue to consider opportunities in certain parts of Australia as well. Because there are some of the good mining jurisdictions, good uranium mining jurisdictions there as well. It just becomes a little more difficult from a management point of view, but North American focused would be, if given the choice, that would be our number one choice.
As far as types of projects, conventional or ISR works for you?
Yes, absolutely. I think for us, it's all about, I love the Athabasca. I love the grade. Grade creates a lot of opportunity and creates a lot of forgiveness as well when it comes to mining. But at the end of the day, it comes down to how much can you make on a per pound basis and what's the costs. And I think that ISR is 60% of the world's supply coming out of ISR. There's no reason to not, or there's every reason to consider ISR as well.
How about awareness, Roger? Some folks are, I guess, unhappy with the frequency of news and updates, and then also just general market awareness of UEX and getting out the story of the strengths and also differentiating itself from all of these peer companies in the basin. What would you say on that, and what's your guys' plan in 2022 to increase awareness?
This year's focus has been dominantly on what we did with JCU. I think for us, what we're finding as we started out in our marketing plan this past year was marketing exactly that difference, and that is the portfolio angle that we bring, that we're evolving into a long-term and sustainable uranium company. It's just not as, I guess where feedback we're getting back from investors, it's not as sexy as the one shiny object project that other companies have. So we're going to be a lot more active in 2022, getting the news out, doing a lot more information on our social media about the details about what makes value, spending a lot more time in talking to guys like yourself than we have in the past, just trying to continue to discriminate ourselves as the portfolio of opportunities instead of just the one. I think probably the greatest value driver we have in our company is the fact that while we do have development ready projects and we're moving forward with through JCU and Denison at Wheeler, and we'll be part of the Cameco's next development project at Millennium, and we do have our Horseshoe Raven stuff moving forward, it's the ability to have that lower risk exploration portfolio discovery advantage and doing more work this year. To be fair, we only did $2 million worth of work last year because this time last year we're just starting to see the movement in the market in uranium space. So we made a conscious effort to cut back on work last year because it was, I think last winter was probably the lowest exploration effort in the Athabasca Basin in 20 years. And so we're going to go to one of the highest ones this year as a collective group. but no, just continuing to talk about our, while we don't have to do the work to build the mines that we're partnered up with because we're the minority owner, it gives us the ability to look and focus on new discoveries, and our portfolio of mid-stage resource level projects is extraordinarily enviable even amongst the majors. And I don't think people truly do realize that. It's just it's a matter of effort, and we're going to up that effort in terms of dollars in the ground over the next couple of years.
Yeah, let's get the market into the proper stages to ramp up some of those efforts. Just back to ESG related topics, the native relationships I think is also important for you guys. Maybe just speak to some of the initiatives that you guys have, with some of the native groups and ESG efforts in terms of local initiatives on the key projects that you're moving forward that you have the torch on, Roger, as you spoke about Orano having more of that obligation in some cases, et cetera. Talk about ESG initiatives at the company, and then also how you plan to continue to build the relationships with those native groups that are involved with the projects. Would they have the potential to invest or have a stake in the company and the success of some of these projects?
Fair. I appreciate that. And I was in saying where we had the torch, because that's exactly where I was going to take that question as you were answering it. Most of our operating projects, almost all of them, are on the east side of the Athabasca Basin. This year, we've done a couple of initiatives to try to spur new business opportunities for the communities in the east side. So, for example, our winter program at Hidden Bay, we contracted out for their very first ever a catering company called Athabasca Catering, which is well known in the mining end of things. They operate at Cigar Lake and MacArthur and McCain and Key Lake and all the key mining operations. They're the big caterer of choice. And they're a group owned by a consortium of the First Nations communities in the north. This year, we gave them their very first ever camp catering contract. We've been encouraging this as a business opportunity. So we did that for the first time, and we're hoping that they'll be able to provide the capacity to come back again this year on our other two camps. So we work very actively about, hey, here's a business opportunity, can you help us out on those fronts? And we'll be willing to take those chances to do that, to spur business. We've been focused as much of our contracting. We have targets in place to make sure our service contracts are as far as we can, and there's capacity to do so coming out of the north. We did a program this year with the Métis community in Pine House, where they had an absolute need for some serious, you won't think of remote communities having homeless issues. We provided some infrastructure without being, they reached out to us for some help, and we just thought the help that they were asking for wasn't nearly enough of what the need was. So we teamed up with one of our suppliers and provided them with some infrastructure so that they can help people who are homeless that have addiction issues be able to have a safe place to go as the winter closes in and it's very cold up there. And it was a little more than they were hoping for. Our goal is to be neighborly in our backyard with them, so they think about us. We have specific targets with our first ever ESG report came out early last year or early in 2021. And we have goals on all of the key metrics as well, greenhouse gas emissions, water uses. This year we'll be putting things like water meters on our drills so we can get a sense of how much water consumption is being done and how we can improve. So we have a very good model in place. I think probably the thing that encouraged me the most, which is kind of interesting. One of our key stakeholder communities is Wollaston Lake, part of the Hatchet Band, and we wanted them. We've always had employment opportunities with the band going back many years, and they were in lockdown due to COVID, and they were very frustrated that they couldn't get out and work with us this year at the beginning of our winter programs. And so we've, when they was on day one of the lockdown ended, we had them in camp with proper COVID protocols. I think there's really great. We're trying really hard to be recognized as for looking at. It's just such good business in the uranium space to have community involvement at service provider level, at the neighborly level, and employment level. And we're still small. We know where the expectations are. We know what the historic work's been done. I mean, I look at Cameco and say, man, they were a world-class ESG company before ESG or even CSR was a popular term, and that's what we'll aspire to.
Appreciate that, Roger. It's always good to discuss those things and seeing what the companies are doing on those fronts to essentially help grease the wheels and make sure that the community continues to have their interests looked out for. And, for companies to listen to what community wants, not tell them what they want, but to listen to what they need there. And obviously, mineral development in this region is key. And, there's not much else that's really going to replace that or move the needle for development of community and really enrichment for community as well. Roger, to finish up, back to broad strategy. You've got the exploration component, which is good to have in the back pocket. You've got the joint venture component, the potential for monetization as well with that on non-core projects. You've got minority interest in major projects, and potentially you might even add the efforts to potentially become a producer yourself, cake in a can. What would you say about all of those, and what do you think is the most likely to occur for UEX? Talk about overall strategy and what the plan is.
So I think you have to break that down into time frame. So in the short term, in the next couple of years, it's going to be all about the new discovery potential and working on those, the Christies and the Hidden Bay type projects that we have in our portfolio. As our partners move those other projects forward, Cameco's not quite ready to move Millennium forward until the day comes that MacArthur's up and running and Cigar comes to its natural end of its life down in 2028, 2029. So over the next couple of years, our focus will be letting Denison do their thing at Wheeler River and being a positive partner to contribute with what we need to there until they get into construction. So the midterm strategy is about becoming a producer, and being a part of a producer at Wheeler River, and then as Millennium moves forward. And then the long term is the sustainability of the company with all the assets that we have at Horseshoe Raven, and we'll be looking in the midterm to move that one forward with further engineering studies, because we really like the heap leach potential. So short-term exploration potential, moving into the producer status, and then that sustainability in the long term.
And Roger, for potential investors who are on the sidelines listening, market cap of the company stands at about 185 million Canadian. What would you say to them about considering UEX at the current uranium sentiment environment and also at the current price level?
If you want to be exposed to low risk exploration potential, our mid-stage resource level projects really gives you that value. That honestly is, no matter what the cycle is, high end of the cycle, uranium cycle, low end of the cycle, somewhere in the middle, new discovery potential drives value. You want if you're an investor who wants exposure to uranium price, we have resources. You want exposure to emerging development for a cheap angle in on that. And we have the ability, because we're a portfolio company, to vary the strategy slightly as the market conditions change. And there's not too many uranium investments that give you that flexibility, that exposure to either pounds or discovered potential or emerging production.
And the best way for investors to reach out to the company?
The best way is to always reach out to us via email or Twitter. Our email is uex@uexcorp.com. That's where we answer our investor inquiries. We certainly get our fair share of Twitter, and UEX Corporation as our Twitter handle. So all one word.
Roger, well, thanks for coming back on to update. Appreciate it. Best of luck in 2022.
Well, thank you very much, and thanks for having us on. And we will talk about some of these challenging issues, which aren't just as clear cut as you'd like them always to be.